Hey everyone, how's it going? It is 6 a.m. on July 16th. Hope you're having a great morning so far. Let's take a look at how our bond markets are opening, or not our bond markets, our futures markets. So it's looking quite positive, actually. So S&P 500 up about 20 basis points, Nasdaq also about 20 basis points, Dow up about 35 basis points. So at the cusp of being non-random for Dow, randomly up on the S&P and Nasdaq. Yesterday afternoon, we were talking about not getting too excited. Yes, we were making new highs, or we did make a new high yesterday on S&P, but then we pulled back. And the RSP did jump higher, but now it's starting to struggle a little bit. So we really do need to see if this continues because this was a really big and really fast move. If it had gone up more mildly like this, we'd have more confidence that it might be able to break through. But here, because this did not continue and break through with strength and momentum, and we kind of tapered out as we neared that high, then we have to be very careful. If we take a look at what is called gamma exposure inside the markets, that is at an extreme level and that is mean reverting. And so that is telling us that we need to be careful as well. So for now, it is better, it is much better that there is broader interest in the markets, that we're not just concentrated in those FANG stocks anymore or those really large cap stocks. Although we are still getting some interest in, for example, like Apple, we're it's still jumping up and making new highs. But for now, the last few days, we did get broader interest in the markets in more sectors other than just technology. So that is very positive. But the market is still a bit overextended, and we are going to expect at least a mean reversion, at least to that EMA 20, although it'd be much better for the market if we did go down to that MA 50. So notice the shift. Before we were really expecting that MA 50 because we didn't have the breadth in the market. But then the breadth came in to the market. So now we're still looking at maybe a mean reversion to the EMA 20. The pullback to the MA 50 is not off the table completely, but it's just a little bit less likely than it was last week. So we just want to watch out for that and just see that this pulls back. Another really very important thing to realize is we got earnings, but also we have options expiration this Friday. And oftentimes when the options expire, we get a really good picture of how institutions are repositioning themselves. If they take all their positions and just roll it till next month, okay, then everything is looking the same. We could still be very positive on this market. But if suddenly they just let their calls roll off and they don't renew their calls, or they only buy half as many as they had before, or they're buying calls in different types of stocks, or they're not buying calls, they're buying puts, the picture can change very suddenly after options expiration. So this Friday, or specifically after this Friday, we will be able to see if there's a shift in the positioning of the options, and uh, we'll get that. We'll be able to tell next week if we still think that this is going to continue to go up, or if we're going to pull back, or if we're going to mean revert, or if it looks really like we're turning around and maybe going down to that MA 200. Friday's end of Friday, so over the weekend, we'll be able to see much better, much more clearly what direction this market might go in. So I'm looking forward to that and seeing where just how high this can go. It's not looking great. IWM shot higher. It's continuing to shoot higher. So this is going really parabolic and playing a little bit of catch up. That usually is the end because these are the laggards. The laggards are starting to catch up. The Dow Jones is starting to catch up. So that is towards the tail end of a rising market, not the beginning of the rising market. So it doesn't mean that it's going to end immediately. It means that we're just in the later phase or the last phase of an upward market. But we are talking about a more imminent mean reversion or pullback. The movement of the IWM and the Dow Jones is more long term because they need their day under the sun. They do need to participate in a rally, so we need to give them a few months in order to do that. In any case, right now it's just looking like we really want to see after Friday just how much we think that things might pull back, or if we flip around completely and say, hey, we're just going to keep on going up. Right now, though, it's looking like very likely at the very least to the EMA 20. The bonds, let's take a quick look at bonds. Actually, before we do that, we've got our VIX. Our VIX is slightly elevated. You can see that this, if I pick a low, it would be right over here. And we can see that we're moving upward like this. So the VIX, even though we're in a normal range, we're at the upper end of that range and we're moving higher. And there's something called the VVIX, which is the volatility of the volatility index. And we can see that in the VVIX, we have pretty much the same thing. If I use the same dates, yeah, obviously there is a lower spike over here and a low spike over here. Well, I'm just using the same dates that we drew on the VIX. So this is an upward movement. What does that mean? So we can think of it as speed and acceleration. If my acceleration is going up, then my speed will absolutely go up. If my acceleration goes down, well, it just means it's just a matter of does it go negative, right? If it goes negative, then my speed will go down. If it stays at zero, then my speed will stay steady and just keep on moving in the direction that it's going. So right now, both VVIX and VIX are going up, which means that our expectation is that this should move higher at a faster rate. And that's not great news. Of course, this has only been a short period of time. So this could mean revert or just come back down into normal ranges, the VVIX as well. Okay, so we went up for a while. We hit this top. I'm not looking at the moving averages here. I'm looking at these tops right here. We hit that top and we went sideways. We could come back down on that VVIX. But if we don't, then that means VIX is going higher, and that is not great for the markets. And then we'll get the mean reversion or the pullback that we've been talking about. If we look at bonds, looks like this morning it's undoing the move that we had yesterday. So some choppy movement in the bonds. And that is why yesterday I made the comment, hey, we still have high conviction that we're going to come back down. But at this point in time, it may not be worth it might be more efficient for you to allocate that capital somewhere else where it can accelerate and just move faster, given that the S&P looks healthier and we are not on an imminent pullback, imminent risk of a pullback. So over the next couple of weeks, it is definitely possible and likely that your money is better allocated somewhere else. Maybe like, for example, XLE. XLE is looking very good after it broke up above this trend line over here. So instead of sitting here and waiting for TLT and say, hey, by the time it comes down here, I might make 30 or 40%. If I go into something like XLE and the strongest stocks in the XLE, then I might make 30 or 40% in a single day. So we might be better allocated somewhere else. So DLT, still high conviction that we're coming down. It's just slow. It's just very slow. So you may consider reallocating. Let's take a look at where our economic calendar, we had our retail sales numbers. Let's take a quick look at that. Not great. Retail sales down and but better than consensus. So we'll probably have a positive reaction to that. X vehicles. So vehicles seem like they're down a lot because without the vehicles, then we beat consensus and we did quite well. So let's see how that reacted. Initial spike upwards in the pre-market and still up. And you can see there's elevated volatility. This is really interesting. Unless we're just yeah, if you look at this activity right here, at the level of zoom that I have, just compare it to the activity right here. Much thinner, right? Only until after the retail sales where it starts to look normal. Look how gappy this is and how small those candles are and how there's distance in between some of the candle prints. And if I look right here, there's no distance between candle prints. And yeah, there are some that are small, but they very quickly grow in size. And over here, we were just sparse all the way until that retail sales. So that's really interesting. So either a lot of people were waiting for those retail sales, but if that was the case, we would see a lot more activity pickup. It just looks like there's low participation this morning for whatever reason. So if that carries over into the actual session, then we'll be very low volume today. And low volume means high randomness. We can't trust any move. And when you have high randomness, you want to give time for your trades to work out. You don't want to have tight stops. If you're using stop losses, you don't want to set them too close because you don't want to get taken out by randomness. So this is going to be really interesting. That this level of sparsity is not something that I've recall seeing in the last few years, actually. You can see the density of this right here, the density of this right here, the density of this right here, density of this right here, and then compare it to today, right here. So it didn't pick up until after this spike right here. So we'll see. We'll see what that means for the day. Let's see if there's something that people might be waiting for. No, I don't see anything. Tomorrow, uh, other than maybe a couple of Fed speakers, but no, I don't really see anything on the calendar for people to be waiting. So just be very careful. We might be in for a choppy but volatile day. So up and down, up and down. So I'm not necessarily going to comment in terms of direction, but if we move just up to a couple of these regions, we're not going to get too excited. If we start getting really directional, like this would be really directional, right? We span 1, 2, 3, 4.5 of these regions. Then we can be more confident of a direction. But with this so low, I would just wonder if that's going to carry into the open. So that's something I'll be watching very carefully. I'm not going to make any moves until at least half an hour to an hour into this market, just because this is so unusual. I really want to see how that plays out. before I'm comfortable trying to gauge what this market might do, either up or down, or how far up or how far down. So this is a morning to be a little bit more cautious because this is just so unusual. And just wait. I might even wait 2 hours or 3 hours just to see how this plays out. Okay, so just be a little careful this morning. We're still neutral in our portfolios. And yes, the SPY is looking healthier and moving upwards, but we still have a lot of signs that there might be at the very least, a mean reversion. If I look at my 90-day highs, we look at this 378, 90-day lows, 17. There's extreme disparity there. This is getting very close to that 400 number that we normally look at and say, hey, if we cross 400, usually within 2 or 3 days, we will have a pullback. But we're getting there. We're not quite above 400 yet, but we're close. So it could happen at 370. But if we go above 400, then we'll have a lot higher conviction. So just be careful. Stay neutral for now. And then we'll just see how things play out, especially after Friday. I'm really excited to see how things look after Friday because we could get a really good clue. If the picture changes from what it is right now, that's a really strong signal. And then we can really position ourselves. It'll help in the positioning of ourselves. We'll have a lot of really high conviction trades. So it might even be better to say, hey, we're going to sit on our hands for a few days because we're going to have so much better data. And it doesn't hurt us all that much to just sit in cash for a few days. Okay, so we're just looking forward to more data this morning just because of that weird, unusual low participation situation right now. And then more data in terms of what happens after options expiration. Okay, so we'll wrap it up here. I hope you guys have a wonderful rest of your day, and I will see you in the post-market session.